Hi, Kumar here, and now we're going to learn about the TTS price formation. For our power strategies, we will be looking at the following price formation. It is the AB equals CD formation. The AB equals CD formation will be the actual price formation that we trade off of. I'm going to cover this formation now, and will then explain how we will use this in later videos. The AB equals CD is a simple yet very powerful pattern. It comprises of price movement in one direction, which is the A to B leg, then a price retracement, which is a C to D leg, and then a move equal to the length of A to B back in the original direction, which is a C to D leg. For price trending up, our ABCD is an upward ABCD where A to B is going up in price, B to C is retracing in, so coming down in price, and then C to D is an equal distance from A to B, hence the AB equals CD, in the original direction, which is up, which forms the C to D leg. With price trending down, we've got a downwards ABCD, so an A to B of price falling, a B to C of price rising, so retracing into the previously falling price, which is the A to B leg, and then a C to D leg equal in length to A to B, and going down in the original direction determined by A to B, which forms the C to D leg down. Now we are looking for the B to C leg to have retraced at least 50% of the A to B leg. So as you can see here, for a downward A to B leg move, we have price retracing up, which is the B to C leg. Now a retracement is simply a move into previous price action. So before we have A to B going down, so any price coming up is retracing into the down move. So what it means is price has been hit going down, 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 down. Now those same prices are hit, but coming back up. So that is a retracement. If price goes up to this point here, it's a 50% retracement. What we're saying is the halfway point of A to B, if that is hit, that is a 50% retracement. If prices go from B all the way back up to A, that is a 100% retracement because price started from there, it went down, and the same prices were hit all the way to the top where it first started, which is at point A. So that's a 100% retracement. What we're looking for is for B to C to be at least a 50% retracement in order for us to count this as a valid ABC. Now if we look at an AB up move, it's the same thing. We've got price movement going up from A to B. We've got the same prices being hit, so price coming down, so price is retracing from B to C, price is retracing into the A to B price movement, which is the previous price movement. If price comes down halfway down of the A to B move, that's a 50% retracement. Point C is over 50%, as we can see it's 50% plus. And if price came all the way down to point A, that will be a 100% retracement. We are looking for at least a 50% retracement, so a 50% plus retracement of the A to B move, for us to have a valid ABC formation. Now this retracement should not be more than 90% or the pattern is void. So looking at this A to B move down, we have price retracing now, which is forming the B to C leg. Now 50% is the minimum we want, but 90% is the maximum that point C can be at. So if price carried on going higher, we would negate this trade and we wouldn't look at it. It would be void. With price going up from A to B, we have a retracement down B to C. 50% is a minimum retracement we want, and 90% is a maximum retracement we want. If price carried on going down, lower than the 90% retracement, then this pattern would be void and we would not look at it. When displaying these diagrams, I am trying to point out that price action, so the ABCD lines, are price movement. So that is what we are looking for in the market. Let me show you what I mean by this. Now just to give you an example of what we mean by our ABCDs, so we've got our candlestick charts here. We're looking at the 4-hour chart here on USD CHF. Just to point out what we're looking for an ABCD formation in price. So here we can see there's an A point here, a B point here, a C point here, and a D point here. So we have an A, B, B to C, C to D. And here we're looking at GBP USD on the 4-hour, and we can see here that we have an A point, a B point, a C point, and a D point. Now as you can see, price is not always going to go perfectly in an ABCD formation. In this area here, you can see that price did a bit of a little ABCD here as well. A, B, C, D. But price didn't go straight up from this C point up to that D point. But that doesn't matter. Price doesn't need to go like that. We're just looking at the major pivot lows and major pivot highs. So we've got an A to B, a B to C, and a C to D. So the price formation doesn't have to go exactly from A to B, B to C, and up from C to D. It can be a bit jagged. It can go in zigzags up to that price. As long as that C point isn't violated to the downside, that will actually negate the whole pattern. As long as it is, the major low is the A, the major high is the B, the major low down here is the C, and the major high here is the D. As long as that is the case, and price can fluctuate in between, that doesn't matter. We're just looking for that motion of A, B, C, D to form. So here we're looking at USD JPY on the 15-minute chart. So let's just look at a downward ABCD. We see here that we have an A point, a B point, a C point, and a D point. And what you can also notice in there, we actually have an A, B, C, D within the C to D leg as well. So what we've got here is an A to B, a B to C, and a C down to D. Now this is an AB equals CD, but we also have in the C to D leg an A to B, a B to C, and a C to D. So we see in all the ABCDs I've spotted that the B to C retracement is greater than 50% of the A to B, but less than 90%. So it's valid, and it's an AB equals CD. So we're looking for the motion of ABCD. The fluctuations don't have to be exactly an ABCD, as long as the B point isn't violated when going up to the C leg, and as long as the C point isn't violated when going down to the D leg. And as you can see, those points are not violated by price when going from B to C up and when going from C to D down. So now you understand what we are looking for. Let's see how we will actually use those price formations in the market. Move on to the next page now to continue with the training. This is Kumar for Trade to Success University, and I'll see you in the next video.